Now, here's the next question, Tony. How long do you guarantee the IRS audit? This person is saying, what if the IRS comes back, 2, 3, 4 years down the road? What happens then?
Well, typically, they close everything out in 3 years. But if they're audited and they question the cost seg, we'll be there.
Okay.
But again, they usually hold things open only for 3 years.
Okay. So
that's the IRS.
Here's the next question. Can a doctor who previously ran her practice out of her personal home 5 to 7 years ago benefit by this? Apparently, she now is working as a nurse in the emergency room. Is there any way to go back on that?
No, it's her home now?
Yes.
She's still using it as her home?
That's the way I understand the question.
Yeah, no, I can't see any benefit there, especially if it's no longer being used as a commercial entity. Now, understand, I get the question all the time. We are talking about commercial properties, which includes, rental units. So if you've got a fourplex, or if you have 10 houses that you're renting out, then if they're like personal individual homes, but they're being rented continuously, you can do it. So in that particular case, no, I couldn't see a benefit for her. But that's a very unlikely scenario for the most part. Understand, there are 4 million buildings out there right now waiting to be cost-segged. 80,000 are built every year. And there's just a handful of these things that are really done across the country. But just think of it, 80,000 new buildings every year, 4 million sitting out there waiting to be cost-segged. And every time it changes hands, it can be cost-segged again. Now, let me also talk about one of the caveats. It's got to be after 1986, so January 1st, 1987 and after. So if you have a 100-year-old building and it's purchased in 2000, you can cost segregate the building. If it's a 1985 purchase, you can't. So that's another criteria. Other than that, tax liability, not selling within a year or two, and being after 1986, you're in good shape.
Okay, great. We got the question here. Do you have the form to capture for the pre-qualification?
Yeah, that's what I'm got on the screen right here.
Okay. All right. So we'll
very simple. It's called the Complementary CSI Property Analysis Form. As I said, we prefer to get a depreciation schedule, and most of the CPAs have it on a form that can PDF it and send it over to you. That's best because sometimes they may have taken carpeting, sometimes they may have taken a parking lot. It's best to know that. However, our studies are so conservative that in these 5,000 studies that we've done, we've only had a handful that we've gone under. We've been within 1%. So we prefer to undersell and over-deliver. Now, as far as the information, we can submit this via the website, which you learn in training. But if you're out in the street or a guy doesn't have the depreciation schedule and he wants to get the information, he wants to know what he can save, property type, whether it's a retail strip mall, warehouse, storage, medical building, you name it, where it is, Manhattan, building the date acquired July of 2003, building cost, okay, how much it is, excluding the land cost. So if you paid $2 million and they just lumped it together, then you probably would take an estimate of 20% or so, but just notate that our guys know the different parts of the country and what land is worth. Obviously, land in Manhattan is worth a lot more than land in Paducah, Kentucky. So they'll apply the appropriate estimates. But if you've got it broken down, say it's a $2 million purchase, $1.6 million is building, that's what you want to know. Now, additionally, did they make any improvements or renovations? Because if you have a renovation that's over $100,000, it's probably worth segregating that cost. And again, remember, most of that stuff is personal property because it's not part. You don't add on a piece of building, you add on the internal components. So when that was completed and who the owner is, if there's any special instructions, if you got items like the square footage or any other key information, you can go ahead and do that. So anyway, that's a complementary analysis, and that's the information that you would utilize. Again, name, email, phone, property type, date, building acquired, building cost, and a copy of the depreciation schedule if you can get it.
Okay. Let me ask you this, Tony. Next question here, and before I ask this question, I just want to remind everybody this is going to be an open forum tonight. As we're going through the material, if you have any question, please, by all means, go ahead and ask it in the questions section, and Tony will give you his best answer. Does this client CPA get involved with the process?
He can get involved in the process. Sometimes they're a tremendous help. Sometimes they're a little bit of a bottleneck because when they get busy, if you're trying to get the depreciation schedule, it may take a while. I'll tell you something interesting. I worked the state convention for CPAs. There are about 600 CPAs there. I was amazed last August. I worked 2 mornings, and I probably talked to about 100 of them. 25 of them said, oh, yeah, we're familiar with cost segregation. Matter of fact, we've done it with you folks. So a lot of them had done it with us because we're pretty aggressive in the Louisiana marketplace where we started. 25% said, what? Had no idea what it was. And the other 50% said, well, I've read about it, I'm familiar with it, but we've never really applied it for any of our clients.
Oh,
so we're talking about 75% of the CPAs that aren't really truly familiar with the process. And again, understand that's not the proper way to do it. You want an engineering study because you want the building expertise, which they don't have. Now, we have some programs. We have what we call a CPA BIQ. If you go ahead and sign up a client and you go to a CPA and you discuss it, you say, listen, you know, we're saving this money for your client. I'm sure you have other clients who could also use this. And we have a program called the CPA BIQ. We get him a PIN and a password, and he can pull up on the screen a basic format to plug in the same type of information that we had. Now, understand, he's got the depreciation schedule. He can plug all that in. He can tack on a consulting fee of $500 or $1,000. He can tack on a $1,500 cost for doing a 3115 form, and then automatically we calculate his earnings along with the cost of the study, give a complete package. The guy says, all right, Mr. Jones, looks like your taxes are $150,000 this year, but I know you've got a building, so let's run the numbers on this cost segregation application. They go ahead and run the numbers. He says, well, it looks like we can save you about $125,000 by cost segregating your building. So the question is, would you rather pay $150,000 in taxes this year or just $25,000? Now, understand, when that CPA does it, he also has an engagement letter that's printed. He says, okay, you'd rather pay $25,000? Sign here. The guy approves it, gives him a check for half the study fee, sends it in. Guess who gets the commission? You do.
Right. Awesome.
We have guys. I'll tell you one other quick story. One of the guys was in Destin, Florida. His wife was shopping at a tourist souvenir shop, and he was just standing around. Some other guy walked up. He started talking to him. The guy turned out to be a lawyer. He said, well, you know who owns this building? He said, yeah, that guy over there. Well, he went and talked to him. He said, well, that sounds good, but you got to talk to my CPA. So he gave him a number in Maryland. He called the guy up. He said, oh, that's great. He said, yeah, he's got 13 of them. His brother's got 13 other souvenir shops. So right away he got 26. He said, but I've been looking for somebody like you for a while. He said, but let me get through this tax season. I'll call you back. Calls him back. He gave him 62 properties, including the Bank of China on Madison Avenue in New York. I'm talking hundreds of thousands of dollars in commissions. And that's from one CPA. And the CPA doesn't have time to do these things. They're looking to partner. The smart ones are looking to partner with somebody like us